pas en pite.
Hello everybody, welcome back. Let's have a look at Bitcoin and a little bit of the Bitcoin dominance. But as we are on a Sunday, arguably the worst possible day of trading, because whatever it does is basically, it's not irrelevant, but it's usually quite silly, and especially if we've been going up and now we're consolidating. Coming into the next trading week, obviously, Monday morning, it's not uncommon just to see a dump, a sell-off because of whatever happens through the weekend. Let's just take those profits. Let's wait for the reality to kick in, which is Monday to Friday, because Bitcoin has effectively been sucked into the system now, so it belongs to traditional markets. Really, it's all part of it. It's like a massive amplifier of what's going on in the world now. But that said, we've recognised lots of times, especially when we're doing these live streams, we do look at the occasional stock, and it's not uncommon now to see major tech stocks specifically, going down worse and faster, and bigger pullbacks, consolidations, or dumps, whatever you want to call this, than Bitcoin. So Bitcoin's held up better than some of these top cap traditional market tech stocks. Pretty impressive stuff. So there is strength in this, and I repeat, I don't believe this is a bear market. First of all, we are outside this descending trend line, and we are being held above the 10 exponential 3 days in a row. So that's usually the sign of a continuation move. The only thing that would cancel this out in a way is outside forces. The Fed, Russia, Ukraine, all this sort of stuff. So we're just, we do have to sit on the fence to an extent. And again, if you watch my channel, you know that selling a sizable portion around here and then buying back on the way down has been my preference. And I suppose that is the most standard, boring way of trading spot, for instance. But it is. Currently it's all worked out, but I don't expect these to be perfect buy orders. That's why I never all in, never all out. That's the way. And look, if I zoom out a little bit further, oh god, I've got areas down below, all the way down. These are all areas of significance. They're there for a reason. They're there because of there is basically buy orders here and here and here. So look, I'm not saying I have the answers, but I have a strategy, and it's the same strategy I've employed for many years. And it works. So let's have a think about what we're really hoping for. And again, I'm repeating myself here, but arguably this is the main deal. Okay, so we got this uptrend. We broke out the descending trend line. Things went to a greater move up. We also had signals on the Ichimoku cloud for a pump and a continuation trend. Both of those have finished now, but we've been left with a golden cross. This is the battle scar that the chart has received. If you're a bear, that would be. So that's bullish, right? It's a bullish cross, and in the vast majority of times, especially for Bitcoin, you get a golden cross, it plays out the first time. You get a death cross, it plays out the first time, and they largely play out to big moves. We're talking, just on these most recent occasions, quite large, 40% move up, 40% move down as a result of one of those crosses. But the cross itself isn't the signal. The cross is a sign of strength, and it's basically moving averages, positioning themselves into the appropriate place. And so I like to see these get retested, because that is often the case. Even with death crosses, you get a retest of them. So a death cross here, retest of at least the 50 exponential got retested over here. The death cross here, I suppose we pumped up to the 50. Golden cross didn't actually get a dump down into it, so it's not always the case, but most of the time it is, especially when sentiment has been diminished. We are bear market. We're going down 10,000. It has to happen. Why? Because that's where you've put your entire amount of buy order down there. I saw it was going to go to 10,000. I heard it. I saw it on Twitter. It has to happen. So all my funds are sitting there waiting for that 10,000. No more, no less. Exactly 10,000 to get hit. Ooh. Well, if that works, then you win. But if it doesn't work, you lose ultimately. The idea basically for me, and again everyone's trading strategy is different, is to have incremental buy orders, at significant lows. If they don't get hit, no big deal. That's available capital for you to use at a more appropriate time, preferably bull run type vibe. And speaking of bull run, obviously, this is no bull run. We're still, in my opinion, in a bull market. We've seen a lot worse than this in the past, and a longer retracement as this as well. So it's not the end of the world. Obviously, it would be the end of the world if we can't start breaking down even further. Remember, I've been in crypto for a long time, been in traditional markets prior to that as well. These sort of pullbacks are required in bull markets. And again, I know this it upsets people when I call it a bull market, but it is. Let's face it, that's a bull market still. But what we're seeing right now is a full-on nasty retracement driven by economic factors, that we can't really account for generally, but we still feel like we've got a handle on this. Now there is is it emergency meeting or is it just a meeting? There's a Fed meeting next week. I'm not entirely sure what the day is. I'll get back to you on that one. Weekends are madness with the kids around, but yeah, there's a meeting next week for the Fed, and they're going to talk, which is what they like to do for ages. And it's not what I don't expect them to mention the amount of basis points on that particular meeting. I think we're all expecting traditional markets. Everybody's expecting the worst, and that's what we should expect. And because we're all expecting that, I think markets have largely priced it in, which is a 50 basis point. It's no big deal. So it's sizable, but it's not. It's not ridiculous, and I honestly truly do believe that the markets have priced the majority of that in, which is whatever they say, whether they say it next week or if they say it into March when it actually goes ahead. The markets will just respond with a little bit of volatility, like what we saw on the CPI report, which is it was a dump, then a pump, then a dump, wasn't it? Which is exactly as expected. That's how markets behave, because they have no clarity, no certainty. They're making their best guess, educated guess as to what it actually means, and the truth of the matter is nobody actually has a bloody clue what's going on. This is there's a blunt reality of charts and trading. We use these as guides. This is the best that we've got. All right, this is the best we have to try and make use of the short-term time frames, or even the long-term time. It's the best thing that we've got going for us. So I'm sorry to dispel the myth. TA isn't everything. It helps, definitely helps, and it helps sometimes to a great extent, but it's not everything. So I'm sorry to tell you that. I'm sure you've recognised that yourself, especially when we're doing altcoin trading. You look at all these alts and you're like, well, I don't understand. This had all the hallmarks of a pump and a continuation of a trend. Why did it break down? I mean, well, you're at the mercy of many other things when trading altcoins. You're at the mercy of, first of all, somebody doing something silly and saying something silly on Twitter. You're at the mercy of Bitcoin and whatever it wants to do. It usually drags the market down. You're at the mercy of the greater picture now, which is the overall economy, which can drag Bitcoin down by default. TA isn't everything, unfortunately. So, like I say, you could have the best setup in the world on an altcoin, and it just does not play because there's too many things going on behind it. Doesn't mean that you can't trade them, but you do have to recognise that you need stability, or at least bullish momentum building on Bitcoin. You don't want weakness in any form before you start to press buttons on altcoins. Anyway, so the same analysis stands. There's no need to beat around the bush too much about it. We are looking for a retest of the golden cross, and even that, if we wick down below there, dip our little toes into the CME gap, which is about 41,000, but arguably you want to go down a little lower towards the mid 40s, about 40,500 or a little lower. That's all fine, and that's perfectly fine. If we start closing below here, then that is a problem, because we've already got warning signs on the Itchy Cloud going red. Obviously this has to really kind of hold to be any kind of significant support. This is a strong support, by the way. 41,000 to 40,000 is a very strong support. Plus we've got all these moving averages. Well, I'll say all of them. We're below a lot of them. It's just a 4-hourly, but we're below a lot of them. So this pretty much I would expect to hold. If it doesn't hold, then yeah, full-on calamity. We pull back to a much greater extent, probably back down to our previous lows, right? So again, that is worth talking about. I'm not coming here with any particular hopium or bias. We have to recognise that supports do break, and it could break. We haven't tested it yet, so it doesn't look. We can't really make any judgment on it at the moment. The golden cross has happened, and this is the sort of thing that we want to see. It's the first sign of what could be a trend continue. My overall thoughts on this is that because we're looking for certainty, the whatever it is the Fed want to do, 50, 25, whatever it is they decide to do, the clarity will be given to us in March, and that's when markets will be able to, I suppose, breathe a sigh of relief now knowing what it is that they've got. You know what I mean? You just have to know. It's the knowing that provides that clarity of the overall situation. And just going back to the lower term timeframes, just going back to that 1 hour, we'll just marvel at what happened over here. So yeah, the chart was playing. This was playing. Okay, we had a trend line here, and then I said, look, we should expect a pump and then a dump, because we all know that the inflation is going to be high, even if it's not as high as it was before. We all know it's going to be high. So what this pump and dump refers to is essentially traders going crazy on all spectrums. Oh, we're bullish. Oh, we're bearish. Oh, we're bullish. We're bearish. The overall vibe would obviously be that inflation, that's good for anything that's pegged against the dollar. Why isn't everything just shooting straight up? That's the dream that we've been sold, isn't it? Hedge against inflation. So why, when inflation is really, really big, do we suddenly go down? It's no. It is true. Obviously, if inflation continues to go up and goes up forever, and we go into hyperinflation, you want to have hedges against inflation. Bitcoin is going to be one of those. You could argue that anything that's valued in $1 is also one of those. But the problem that we see here is that inflation's higher than it's been in 40 years, and that was all confirmed. But then we dumped. Why is that? It's because the inevitable is, if we have very high inflation, ridiculously high inflation, then it needs to be sorted out. And that means that this is peak inflation at the moment. And the only way for inflation to go generally at this point is lower, because the Fed are going to intervene. So that's why we're going down. The market's pricing in the fact that the Fed are intervening. So all of this uncertainty provides choppy ranges, and to be honest with you, the way that it generally looks to me is a bit more of like an accumulation vibe. And if we accumulate between 41,000, between 46 mainly, and potentially even 49, this would be a nice range to accumulate in. And the reason I say that is that we will start to close outside of the cloud, and given the flatness of this cloud at this particular level, and trust me, the cloud will go down, because the cloud is basically just 60 periods in front of price action. This cloud is going to go down. We'll see this cloud go down. So we've got a break in the cloud here at this price. We'll also have a break in the cloud down here at a much lower price in the 35,000 zone. So it would suggest that if we can hold this particular level between now and end of March, we'll get a very nice signal on the Ichimoku cloud, a pump signal effectively. It won't be a continuation of a trend signal. We'll get a pump signal towards the end of March if we hold this current price in what I think could be an accumulation range. Too early to say. So March, all eyes on March. We all need to keep available funds for March. The cash is a decent position to have at the moment, especially if the Fed said that they're going to sort out the inflation. That basically means whatever cash it is you've got, if it's $1 or whatever, it's likely to go up in value just by default. So cash is a good position. That's why a lot of this has all happened across the board with traditional markets, because we knew for a while, and we certainly know now, that the dollar is going to go up in value, and that means that stocks, commodities, and crypto, could easily be more affected. But it's clearly been affected already. Largely, I think it's mostly priced in. So cash is a position. Normally, you should say that anyway, waiting for the right opportunity. But in many ways, more now than ever, as your cash, if it's $1, is likely to go up in value, because the Fed will make it so. So, boring analysis, I know, kind of like a broken record. Let's move into next week with an open mind and I suppose a closed wallet. Really, let's not go crazy. Let's stand on the sidelines, watch from a distance. When it comes to March, this is where some real opportunities may become way more obvious, and more instant gratification, buys straight up kind of vibes can take place. For the moment, there's no point in trying to get too clever when there is opportunities around the corner. And that is the truth of it, and that is the beauty of it. We think about Bitcoin dominance as well, just very briefly before I go. Looking at this chart, if we close this candle body like this is the first time we've closed outside of the weekly Bollinger Band in a while. This is a turning point for Bitcoin dominance, usually meaning we're going to continue up, especially with the nature of the way that everything generally looks kind of all over the place. You've seen altcoins not having a good time. They're certainly not going to have a good time, I think, in this current market. Some altcoins will pump, most altcoins will dump. They will lose their sats compared to Bitcoin in the short term as we hedge towards, I reckon we're going to move up towards 46% dominant, top of the Bollinger Band and the 50 exponential over here. So that, I think, is the overall destination. And then even at that point, regardless of whether we're in March or not, we can think about looking at some altcoin setups, buying at supports and things like that. They might not be buy signals, but an educated guess would say that altcoins will probably have a little rally as we get rejected on the first pass from this particular area, 46% dominant. But overall, if you go outside of the weekly, to the daily, it is a bullish looking chart. The chart looks quite good, to be honest with you. It does look like it wants to continue up. If we break outside of this 200 exponential here on the daily, that'll permit a nice big move up. And if you think about this on a horizontal term time frame, the overall destinations are the ones that we've been waiting for bloody ages. In fact, 52% dominant and maybe even 58% dominant at tops. I think given the strength of altcoins and the interest of the retailers in altcoins, and actually even some institutions with altcoins, I don't think we're going to smash through that level. I think this is where we'd get the next massive alt season. We'll probably get an alt season around 52% dominant. If we break through that though, we will go to town on altcoins around 57 to 58. It will be pretty savage and severe, but again, that's all way off at the moment, but that I think is the overall picture. So trading Bitcoin is obviously the best place. Always, for me, I'm always taking profit into Bitcoin mostly where possible with my KuCoin gems or KuCoin piles of crap, whatever you want to determine them at. You don't often have that opportunity, but where possible, I do like to take profit into Bitcoin. That is my balance, always increasing the Bitcoin that I've got. That is the overall goal for me with spot trading. But yeah, when it comes to making some decent altcoin trades, here and here will be epic. If anyone was around in January, it'll be the same kind of vibe. Major rejection from either here or here for a prolonged alt season, weeks, maybe even months, bringing us potentially back down to these levels. But don't underestimate altcoins, but certainly recognise when they're weak. Right, I'll leave it with you there, guys. Hope you have a nice day. Take it easy.
Pas en pite.